Well, M&A activity has picked up, at least for Chinese companies. Yesterday, China Petroleum and Chemical agreed to buy ConocoPhillips' stake in Syncrude for $4.5 billion. Spending by Chinese companies on energy acquisitions reached a record $32 billion last year, and China is expanding beyond just investing in natural resources. So is this a good strategy for the world's fastest growing major economy? I'm joined now by Scott Licamele. He's the director of Red Star Asset Management. And Scott, great to have you with us, and you can well imagine that these acquisitions and resources is really strategic. They've got to pay in order to get these resources, right? Absolutely, yeah. So I mean, on a case-by-case basis, perhaps for the acquirers, they're not the most value accretive deals, but obviously on a long-term basis for China Inc., if you will, right. These are absolutely necessary acquisitions, and we've seen this ranging from direct, investments in Africa, in all pretty much upstream businesses across multiple sectors, from oil and gas to industrial metals. So this is an integral part of their strategy. Well, what's the danger, though, that they overpay for these assets, but that gets outweighed by the fact that they need this because they have such a rising demand for resources, right, for fuel, essentially? Absolutely, yeah. I mean, I think it's just, especially if you look at the dealing in Canada for the oil sands, I think that's yet another important step to secure their long-term or create long-term energy security. So from that perspective, I don't, especially, and also if you look at the deleveraging of a lot of the developed world integrated oil and gas companies like Conoco, they've been selling off assets to restructure and hope to in an effort to pay down their debt. So I think that's sort of a two-way opportunity. Right. So despite the fact that commodities prices are high and they're paying a premium at this point for those assets, it's still an opportune moment for Chinese companies to make these. But Scott, much has been made about China's vast reserves and how much money it has, and where are they going to put all that money? And so beyond resources, though, or resource investments, does it make much sense for them to start getting into other types of investments? Well, I would say one of the key issues that we see and one of the key risks that we see in China, and that involves both acquisitions domestically, M&A activity domestically and also internationally, is that the Chinese have maintained an excessively low interest rate level for a number of years. And effectively, that is hampering the ability of the government to efficiently basically make a transition to a more consumer-driven, demand-based economy. And to us, that's the greatest risk, because basically, essentially, Chinese households are subsidizing the banks because they're, not earning on their deposits. Right. And this is creating essentially a massive transfer of household wealth to banks, which results in... And not keeping it for themselves, and as you say, stoking that domestic demand. Right. Scott, okay, we're going to leave it there, but thank you so much for joining us. Really appreciate it. Thank you. Scott Licamele of Red Star Asset Management.